My name is Mark Bowles, and I'm here to talk to you about venture capital, a subject I know a little bit about. I finished school and worked for big companies for a few years, and then decided to get on the startup side. And in the last 15 years, I've started 6 different venture-backed companies. I've raised 14 different rounds of venture capital for a total of about $150 million. So I'll share with you my thoughts on the subject. You know, there's millions of small businesses started every year in the U.S. and literally only a few thousand get venture capital. Most enterprises that are started aren't appropriate for venture capital. There's other ways to finance or bootstrap. But if you're convinced your enterprise does need venture capital, I will tell you a few things to remember. First, before you approach any VC, you have to obviously have a well-vetted business plan. And you also need to research the VCs themselves in excruciating detail, because you can do a lot of good selling at the wrong VC and be wasting your time. And I was talking to a VC the other day that literally sees 10,000 or more business plans per year, and they only fund 30. So the ratio is not real high, and that's because they can only manage that many with 8 partners to manage those effectively. So research the VC very well. Find out if they invest in this space, if they've done investments in your space recently. Find out if they have dry powder, if they have money to invest. And so do a lot of research, and go further even if you can than that, and get to know them personally. Hang out where they hang out. Try to run into them in social situations. Submitting a business plan by a website is not likely to happen. You really need to have a personal introduction to get started. It's a bit of the chicken and the egg. You need to have a track record generally to get into discussion with them, and to get a track record you need to have some successes in the past, but find a way to break that chicken and the egg and get to know the guys. VCs are really after raising all the rounds of capital that I've done, I think there's the easiest way to think about how they view this, and this is not universal, but I think at some level all VCs kind of look at business plans and new opportunities in this way. They're really looking for pattern recognition, and at a 10,000 foot level they see lots of deals, and they're really looking for pattern recognition. And I would break it up into 4 different areas that they look for those patterns. The 4 areas are capital risk, and they're all risk. Capital risk, team risk, technology and product risk, and then market risk. And think about your business plan and your presentation in the context of those areas. And think about those 4 areas actually in 4 bar columns, if you will, a bar chart. And those, you're going to, let's say 10 points each on each bar chart, on each bar, and you're going to have to get an aggregate score, not 40, but 36 or 37 to get funded.
Yeah.